Good evening, everyone, and welcome back. Let's dive right into the crypto chaos. It was a classic volatile weekend ending Sunday, November 16th. Honestly, the mood is pretty mixed out there. We saw some real selling pressure all week long, a clear sign that investors are a little cautious, moving into that risk-off mentality, which, let's face it, is a huge buzzkill. Now, let's talk about the big guy, Bitcoin. BTC had a tough run. Remember that all-time high near $126,000 back in early October? Well, we saw a significant correction. Right now, Bitcoin is just bouncing around that messy $95,000 to $100,000 range. The big headline? We actually broke below that huge, critical $100,000 psychological support level. That's definitely signaling a short-term bearish trend. But hey, there's always a silver lining, right? Our technical analysts are pointing out that indicators like the RSI are creeping into the oversold zone. That gives us hope for a quick technical rebound. Either way, the weekend movement was negative. Classic weak confidence as we head into year-end. So, what's actually driving this movement? It comes down to two major things: ETFs and the institutions. Spot ETFs and big money. We saw a rough start to November with some mild outflows from the spot Bitcoin ETFs. That's probably the main reason for this recent correction. But let's keep perspective. The institutional demand is absolutely solid. We're talking about giants like BlackRock's IBIT still holding billions in AUM. These guys aren't selling their whole stack. Even the big banks like JP Morgan are sticking to their guns, keeping their long-term target at $170,000. They see BTC as a better performing alternative to gold. And the whispers about a spot Ethereum ETF and maybe even a Solana ETF, that's just going to keep pushing crypto into the mainstream. Okay, let's look at the health of the rest of the market using BTC dominance, BTC.D. It's sitting pretty high, around 60% to 62%. What does that tell us? It means the majority of the money is parked in Bitcoin, making altcoins look weak by comparison. Ethereum is struggling, clinging to support above $3,000, but they've got that Fusaka hard fork coming, and the optimism there is keeping things somewhat steady. The surprising star of the year? XRP, Ripple. It's up about 11% year to date. But on the flip side, poor Dogecoin and the other meme coins, they're down a brutal 48% since January. When money is scared, it moves out of the riskiest assets. The macro picture. Now, the dreaded topic, the Fed. U.S. recession risks are going down. Inflation seems somewhat contained, but the Federal Reserve is staying super cautious about cutting those interest rates. The chances of a December cut are only around 53%. That uncertainty is really putting the brakes on investor appetite for all high-risk assets, not just crypto. And speaking of global events, the whole 43-day government shutdown finally ended, but it didn't exactly inject confidence back into the market overnight. Internationally, the news about Iran and the BRICS nations looking to use crypto to bypass U.S. sanctions is huge. That's a massive step forward for the global de-dollarization movement and for crypto's utility worldwide. PR, Section 3. What happens next? The outlook. So, where do we go from here? There are a few scenarios. If we have a technical breakdown and fall decisively below that 95,000 mark, that would be a major structural failure for the bull run, and we could easily see 89,000 or 90,000. But if the institutional money starts flowing back in strong, if we see renewed net inflows into the ETFs, we could push towards 114,500 by the end of November and potentially hit 130 or 140 by year end. If BTC dominance stays high, Bitcoin leads the way first. Once people take profit from BTC, that money will cycle into altcoins, and that's when we finally see that long-awaited altcoin season. And the best-case scenario? The Fed gives a clear signal on rate cuts. That would send risk appetite soaring, and we'd see a massive capital inflow into the entire crypto market. The experts are still incredibly bullish long-term. JP Morgan is calling $94,000 the floor and sees 170 within 6 to 12 months. And of course, Cathie Wood is sticking to her massive 1 million by 2030 tall. PR, Section 4. Investor takeaway. The bottom line? We're in a consolidation phase right now, which is totally normal in a larger bull market. You need risk discipline. Manage your risk, people. Short-term volatility can be a nightmare, so protect that capital. Look at the on-chain data. It's telling us something important. The big players, the whales, those with over 1,000 Bitcoin, are still accumulating. That's a classic long-term buy-the-dip mentality. Keep the long view. With ETFs making crypto mainstream and those rate cuts eventually coming, you have to ignore the daily noise. Stick to a 5 to 10 year outlook. The long-term bullish story is absolutely intact. We have the institutional backing, the ETFs, and strong fundamentals. Holding steady above 95,000 is the key test right now for the immediate future. So, are you more interested in the details of the Ethereum Fusaka hard fork or the hot rumors about that potential Solana ETF? Let me know.